Section 1. Introduction to the Income Tax Act, 1961. The Income Tax Act 1961 is like the big book of rules for taxes in India. Imagine it as the rule book for a game everyone has to play, called paying taxes. This act decides how much tax a person should pay based on their income. This act applies to everyone, from a salaried employee to a big business house. Before this act, things were a bit haphazard. There were different tax laws which caused a lot of confusion. The Income Tax Act 1961 came to streamline everything, creating a single comprehensive system for income tax. This law is very important because the taxes collected under this act form a significant chunk of the government's revenue. This money is then used for various public services like building roads, schools, hospitals, and funding other important initiatives for the country's development. Understanding the Income Tax Act 1961 can seem daunting, but it's crucial for everyone in India who earns an income. It helps us understand our rights and responsibilities as taxpayers and make informed financial decisions. Section 2. A Blast from the Past, the Genesis of the Act. The story of the Income Tax Act 1961 is quite interesting. It wasn't just conjured up overnight. The seeds were sown back in 1860 during the British Raj, when the first income tax law was introduced in India. This was mainly to make up for the revenue losses incurred during the 1857 Sepoy Mutiny. Over time, this law underwent several modifications. However, after India gained independence in 1947, the need for a comprehensive and independent tax law was felt, one that aligned with the newly formed nation's economic and social goals. This led to the birth of the Income Tax Act 1961. This act borrowed from the previous laws, but also introduced many new concepts and provisions. The act has been amended many times since then, keeping pace with the changing economic landscape of the country. The Income Tax Act 1961 is a testament to India's journey as an independent nation. It reflects the evolution of the country's economic policies and the importance given to taxation as a tool for national building. Section 3. Unpacking the Act. A look at its structure. Now, let's delve into the structure of this significant act. The Income Tax Act 1961 is a voluminous document, but it's designed in a way that is relatively easy to navigate. It's divided into 23 chapters, each dealing with a specific aspect of income tax. Think of these chapters as different departments in a large government office, each specializing in a particular area. These chapters are further subdivided into 298 sections, like individual desks within these departments, each containing specific rules and regulations. For instance, Chapter 6 deals with everything related to how your income is calculated for tax purposes. In contrast, Chapter 6a talks about the deductions you can claim from your income to reduce your tax liability. Understanding the basic structure of the Act can be very helpful. It allows you to quickly find the information you're looking for and understand the context in which a particular rule or provision is discussed. Section 4. The Heart of the Matter. Key sections decoded. While all sections in the Income Tax Act 1961 are important, some are particularly relevant for taxpayers. Let's shed some light on these key sections. Section 80C, for example, is every taxpayer's favorite. It allows you to reduce your taxable income by investing in specific tax-saving schemes like PPF, ELSS, etc. Then there's Section 194A, which deals with TDS on bank interest. It mandates banks to deduct tax at source from your interest income if it exceeds a certain limit. This ensures a steady flow of tax revenue to the government. Another significant one is Section 24, which allows you to claim deductions on the interest paid on a home loan. This section provides substantial relief to homeowners and encourages home ownership. These are just a few examples. Many other sections cover various aspects like capital gains, business income, and more. Familiarizing yourself with these key sections can help you save on taxes and avoid any potential non-compliance issues. Many people think understanding the Income Tax Act is only for accountants and tax professionals. However, this is a misconception. Having a basic understanding of the Act is beneficial for everyone, regardless of their profession. For starters, it helps you plan your finances better. Knowing how your income is taxed and the available deductions can help you make informed decisions about investments, savings, and expenses. This can potentially save you a significant amount of money in the long run. Furthermore, understanding the Act empowers you to file your tax returns correctly and avoid any penalties. It also allows you to claim all eligible deductions and exemptions, ensuring you don't pay more tax than you're legally obligated to. In essence, knowledge of the Income Tax Act, 1961 equips you to manage your financial affairs efficiently and stay on the right side of the law. It's about being financially responsible and informed. Section 6. Real-life tax tales, putting the Act into action. Let's look at some real-life examples to understand how the Income Tax Act, 1961, plays out in practical scenarios. Take, for instance, Miss Sharma, a salaried employee. She invests in Public Provident Fund, or PPF, under Section 80C of the Act. This not only helps her save for her future, but also allows her to reduce her taxable income, thereby lowering her tax liability. Then there's Mr. Kumar, a businessman. He runs a small grocery store and is required to file his income tax returns under the Act. Understanding the various provisions related to business income and expenses helps him maintain accurate financial records and comply with tax laws. Finally, consider Mrs. Gupta, a retired teacher. She owns a house and rents it out. She is required to pay tax on the rental income she receives. However, she can claim deductions for expenses incurred on repairs and maintenance of the property, thanks to the provisions laid down in the Act. These examples illustrate how the Income Tax Act, 1961, is applicable in our everyday lives, impacting our financial decisions and obligations. Understanding its provisions can help us make sound financial choices and ensure we fulfill our tax responsibilities. Section 7. Navigating the tax maze. Filing returns and paying taxes. One of the crucial aspects of the Income Tax Act, 1961, is the process of filing tax returns. It's like submitting a yearly report card of your income and taxes to the government. The Act specifies who needs to file these returns, the deadlines for filing, and the format to be followed. The Act also dictates how taxes should be paid. You can either pay your taxes in one go or in installments. The method you choose depends on your income source and other factors specified in the Act. The government has made this process significantly easier in recent years, thanks to the introduction of online platforms for filing returns and paying taxes. These platforms offer a user-friendly interface and provide step-by-step guidance, making it convenient for taxpayers to fulfill their tax obligations. Additionally, the Income Tax Department regularly conducts workshops and awareness programs to educate citizens about their tax responsibilities. Section 8. The price of non-compliance, penalties and consequences. While the Income Tax Act, 1961 provides a framework for collecting taxes, it also lays down stringent measures for those who fail to comply with its provisions. Non-compliance with the Act can lead to various consequences, including penalties and even prosecution in serious cases. One common form of penalty is the levy of interest on unpaid taxes. The interest rate is usually higher than the prevailing market rates, making it a substantial financial burden. In addition to interest, the Act also prescribes penalties for various offences, such as late filing of returns, non-deduction of TDS, or concealment of income. These penalties can range from a percentage of the unpaid tax amount to a fixed sum, depending on the severity of the offence. In extreme cases of willful tax evasion, the Act empowers the tax authorities to initiate prosecution, which could lead to imprisonment. Section 9. Conclusion. Staying ahead of the tax game. Navigating the world of taxes can seem like traversing a complex maze. However, with a basic understanding of the Income Tax Act, 1961, the journey becomes much smoother. Remember, this act is not just a set of rules, but a tool that allows the government to generate revenue for the country's development. By understanding our tax liabilities and fulfilling them correctly and on time, we contribute to this process of nation building. Staying updated on the amendments to the Act is equally crucial. The government frequently introduces changes to the Act to align it with the evolving economic landscape and address any loopholes. Regularly reviewing the latest amendments will ensure you're always on the right side of the law and can take advantage of any new benefits or deductions introduced. In conclusion, being tax compliant is not just a legal obligation, but also a sign of responsible citizenship.